Why is stock market falling today? No key factors behind Sensex, Nifty decline on July 25. Why is market falling today? The Indian stock market continued to reel under pressure for the second consecutive session on Friday, July 25. Benchmark indices Sensex and the Nifty 50 suffered significant losses, while mid and small cap segments declined even further. The BSE Sensex index tumbled 700 points or 0.8% to quote at 81,427, while the Nifty 50 index broke below the 25,000 mark to trade below 24,850. Lower by over 200 points or 0.8%. Bajaj Twins, Power Grid, Tata Motors, and Infosys were the top Sensex losers, bleeding up to 5%. Shriram Finance, Bajaj Auto, Hero MotoCorp, IndusInd Bank, and Wipro were some of the other losers on the Nifty index. In the broader markets, the Nifty Mid-Cap Index fell 1.09%, and the Nifty Small Cap Index edged 1.44% lower. Among sectors, the Nifty Auto Index slipped 1.33%, followed by the Nifty Financial Services Index down 0.95% and the Nifty Metal Index, down 1.21%. On the contrary, the Nifty Pharma and Realty indices were bucking the weak trend to add 0.2% each. And despite ongoing negotiations, there's no clear breakthrough on a potential India-US trade agreement. While the US has already signed trade pacts with several Asian economies like Japan, Vietnam, Indonesia, and the Philippines, talks with India remain inconclusive. The primary hurdle appears to be the US demand for greater access to India's agricultural, dairy, and genetically modified GM product markets, an area where India continues to protect domestic interests. However, Commerce Minister Piyush Goyal recently said that talks are making fantastic progress and India could receive preferential trade treatment, offering a glimmer of hope. And foreign portfolio investors FPIs have been aggressively offloading Indian equities. So far in July, FPIs have sold stocks worth 28,528 crore in the cash segment, including 11,572 crore in just the last 4 trading sessions. The primary reason for the decline is continuous FII selling in both equity and FO segments. Valuation concerns persist despite strong macro and micro fundamentals, said Santosh Meena, head of research at Swastika Investmart Limited. And the Q1 FY26 earnings season has been underwhelming, especially in key sectors like IT and financials. While some companies have managed to meet estimates, more have missed the mark. Moreover, cautious commentary from management teams has added to investor concerns. The earnings season so far hasn't been disastrous, but it hasn't inspired much confidence either, Meena noted, adding that delays in the US-India trade deal are further dampening sentiment. Analysts believe that while headline indices like the Nifty aren't excessively valued, broader markets, particularly small-cap stocks, appear overheated. The near-term market construct looks weak. Small caps could remain under pressure as their valuations are difficult to justify amid subdued earnings, said VK Vijayakumar, chief investment strategist at Geojit Financial Services. And the Nifty 50 has fallen below the critical 25,000 mark, raising fears of further downside. According to Akshay Chinchakar of Axis Securities, Thursday's bearish candle pattern completed another rare bearish engulfing, indicating a dominant downtrend. Swipe left for next video. Support lies at 25,000, with resistance at 25,245. Bears remain in control unless we see a close above 25,340, he said. Meena of Swastika Investmart added that the immediate demand zone lies between 24,800 and 24,735. If breached, the index could test the 200-day moving average around the 24,000 level. On the upside, resistance is likely near the 20 DMA of 25,300. Latest blogs.